all about the Great Depression and the stock market crashing. And before we talk about the stock market crash and the Great Depression, we have to talk about how the stock market works. All right. And I'm not trying to insult your intelligence. Some people have a little bit of an understanding, but a lot of people don't. And first of all, we want to talk about what a stock is. A stock is merely a piece of ownership within a business. And back in the old days, you would get a stock certificate like this verifying that you indeed own a piece of a business. And so, like, this is an old mining company stock certificate, but you'd get like paper ownership or some type of paper product like this, and it was drawn like currency to prevent like counterfeiting. But this could be bought and sold for a certain amount of value. All right. And so this signified that you had a piece of ownership in a business. And when we talk about stock, owning a piece of a business, the unit of measurement we use is called a share. So one piece of ownership in a business is called one share. So if you buy 10 shares of a stock, then you're buying 10 pieces of ownership in a business. Now, a business, when they start selling stock in their company, if a business wants to sell pieces of ownership in a business, like let's say I own a factory, and my factory, let's say that it is a meat processing plant. And at this meat processing plant, we're so good at what we do, it's a very valuable, profitable company. And I decide that I started this business on my own, but I want to let people buy pieces of ownership in my business. I decide how many shares they're going to be available. And most companies will sell stock in, they'll divide up the ownership of the business into millions of shares so that lots of people have an opportunity to be part owners in the business. So in the Scalise meat packing industry, we're going to say there's 10 million shares available to be bought and sold. All right. And out of those 10 million shares, I'm gonna hang on to half of them because I want to own half the business and the other half I'm going to sell to investors. All right. Well, if you want to buy stocks, you have to buy stocks on a stock market. All right. And in the United States, there's only one stock market, and that's in New York City. Every major country has a stock market. There's one in London, there's one in Berlin, there's one in Beijing, Tokyo. All the major nations have one. This is our stock market here in New York City, and you should be aware that it's on Wall Street in New York City. And so if you want to buy stock in any company, you got to go to Wall Street. Now, uh, obviously, I don't have time to go buy stock at Wall Street, neither do you. You're like, I can't drive up to New York City. And so what you would do back in the day is you would call up someone called a stock broker. All right. And they call them a stock broker because they broker a deal or they arrange a deal for you. So I would call a stockbroker in New York City and they would buy the stock for me. So let's say that I wanted to buy 1,000 shares of Nike. I would call up a stockbroker and say, I want you to go to the stock market and I want you to buy 1,000 shares of Nike. And they would tell me the price, what it would cost, and they would charge me a commission because they're like, hey, I don't work for free. I don't just go down the stock market because you want me to. So they would charge me a commission to make that deal. All right. Now, stockbrokers, they would also give stock advice about what you should be buying and selling. Okay, stockbrokers, have to be good at this because they invest their own money and they give advice. And if I want, if they want my business in the future, then they need to make sure they give me good advice on which companies to buy. All right. Now you can get by with that. Now you can go past a stockbroker and buy stocks online. There's several websites that will let you purchase stocks, and all you need is a credit card and to be 18 or to have your own bank account so that they can draw money out of. Uh, the downside to that is that if you buy stocks online, then that becomes an issue because you're doing the research yourself and you don't have a stockbroker to give you advice. Okay. Now, when a business like my business decides to sell stocks, I want to sell, let's say, remember, I have 10 million shares of my business and I want to sell half of them. So I'm going to keep 5 million shares and I'm going to sell 5 million shares. The reason that I would sell these is because when I sell shares in that stock, I get to keep the money and I can do what I want with it. So ultimately, let's say I sell 5 million shares and I sell them for $10 a piece, $10 per share. That means I'm going to get $50 million to start out with, if that's what I was selling them at. And when we sell stocks, we have, like when you sell it for the first time, you have what's called an IPO, an initial public offering. And Twitter and Facebook, for example, like Facebook, Mark Zuckerberg owned the company himself until 2011 when Facebook started selling stock. And Zuckerberg got all that money and he still owns a good number of the shares in Facebook and still runs the company. You do that because most people will take that money and invest it in their business and expand the business. All right. Some people just want to retire. Maybe I want to sell all the shares of my company to somebody and I just take the money and retire. I can do that if I want to, or invest it in another business. It's completely up to you. So you do that to generate money that you either put into your business or that you personally keep on your own. Okay. Here's the inside of what the stock market looks like in New York City on Wall Street. It's mostly computerized now, but back in the day, you had stockbrokers who were constantly writing down orders about what stocks they were buying and selling. But the internet has made a lot of that obsolete now, and all you need to do is click a few buttons and you can buy stock in a company. All right. Now, when we're looking at stocks, how do we determine the value of stocks? And there are a couple different things that we look at. And I'm going out of order on your outline here, so forgive me. One of the biggest things we look at is a company profitable? Are they making money? All right. And obviously, if they're profitable, if they, like in the last 2 years, you see this information that they're profitable, uh, they're going to be more valuable. Whereas if they're not making a profit, maybe they're not as valuable. And these stock prices, they go up and down on a regular basis, on a daily basis. And so people are constantly looking at information, financial information, and other news about them and determining whether or not they're willing to pay more money or less money for that stock. All right. Now, it's not just profits and financial records that are important, but news, world news about the company. Here's an example. Um, Amazon is a very valuable stock, but when Jeff Bezos, the owner of most of the Amazon stock and the guy who started the company, when Jeff Bezos, uh, when it was found out that he was cheating on his wife, uh, what do you think happened to the value of the stock in Amazon? Did it go up or did it go down? And it goes down because people are like, oh, I don't want to invest in a business where the owner's kind of sleazy and cheats on his wife. Now, eventually the stock price rebounds because Amazon's still profitable. But when that happens, it definitely takes a hit. Look at pharmaceutical companies like Moderna and Pfizer. What do you think happened to the value of their stock prices when they announced that they have a COVID vaccine? Well, they went up pretty dramatically too. Okay. When you have certain innovation or certain news about a business, it helps. A couple years ago, the CEO, the chief officer of McDonald's, it was found out that he was having an inappropriate relationship with one of his employees, and the value of McDonald's stock took a hit because of that. So, businesses, news about the company affects the businesses one way or another. And let me show you how that translates here. If you go to there's a really good website here called marketwatch.com, and it's all things stock market related. Okay. And so what we do is you can look up a company, a publicly traded company. And so we're going to look up some more famous ones. For example, we're going to look up Apple. All right. And you scroll down, you find every company has a stock symbol, AAPL. And right now, for one share of Apple, it costs $121.95. And you can look at things like this little red number right here tells you it's down 99 cents per day. And now you just saw it change in real time. So it's down $1 per day. And this little chart shows you what's been happening over the day. But you can look at what Apple's price has been doing, let's say over the last 6 months. And the trend is that Apple's price is going up. In June of 2020, Apple was right around $82 a share. And now they're up over 120. We can also go back further and look 1 year ago, all right? And you can see that Apple was where it was trending over time. And take a look at this too at the end of March, all right? What happens to Apple and a lot of other companies and their stock price after March 13th? If you remember correctly, that Friday the 13th is when the lockdown, COVID protocol started taking place. And you can see that Apple takes a hit and they get to a low point of $56.09 a share, right? But they do come back from that because businesses aren't as profitable, they're not making as much money. Products, goods, and services can't get shipped anywhere. People aren't out buying stuff. And you take a look at this, and this shows you the range, the 52-week range, a whole year's range, meaning it's been as low as $53.15 a share and as high as $137.98. That's a big range. Okay. If you look at Apple in the long term over the last 3 years, you can see that it was in January of 2018, you could buy Apple for $43 a share. And now it's way up. So if you invested in Apple in January 2018, and now you're nearing January of 2021, that's a huge increase. Okay. And you can see the percentage, you can click on the percentage as well, that the increase of Apple over time is more like the stock value over that time is up 187%. Right? You look at all time, this will stretch back to 1985. There was a time where you could buy Apple for basically 10 cents a share. And even in January, like even in 1984, when this is measuring, that's still not a lot of money. You can go to 2000 and you can get it for $1 a share. All right. But in January, from January of 2000 all the way to 2010, when you start seeing this big increase in the value of Apple's stock, one of the things that helps it out, the advent of iPods, iPads, iPhones, that starts to make it more and more valuable. And you can see that trend over time. You can look at their financial records and see what they're doing, sales and growth. This tells you, like sales, revenue, how much goods and services they sold in 2016 through 2020, and they're doing hundreds of billions of dollars of business. And you can see the trend is that they're way up every year. And if you go down and you scroll down and you look at net income, this is basically telling you their profit. And so every year they're profiting like 40, 50 billion dollars. And so they're coming out ahead every single year. All right. You can look at other financial data for this company and for any company for that matter. And so some stocks are like that. They're extremely valuable. Let's take a look at Pfizer. Uh, Pfizer Inc. All right. And Pfizer right now going for $40.13 a share. If we look at the last year, though, it's been up and down. It's been pretty volatile. And once again, like it had a huge decrease in March, just like everybody else. But let's take a look at the last 3 years. All right. It's been up and down. And if you look at it over time, though, going all the way back to like 1985, it's trended and it's kind of gone down, but gone back over the last 10 years. But it's not really been that volatile. You can see that after the late 90s, Pfizer has been relatively steady, up and down. But now getting the COVID cure will probably help it out a bit. Right? Same thing if we look up Moderna. Moderna Inc. It's going for a little bit more expensive, $150 a share. Now, last week, and here's what we should look at too. Just look at a month ago, and it was only trending at $98 a share, and all of a sudden it's just gone up dramatically in the last couple weeks. And if you look at it in the last year, gosh, it's been as low as $19 a share. By the way, one of the reasons that Moderna stock has gone up significantly is that Pfizer's COVID vaccine has to be cooled at like minus 50 degrees Fahrenheit. And so once you take it out of that really cool atmosphere, it'll go bad if you don't use it. Moderna's vaccine can be kept at room temperature, from what I understand. Right? You can look at their financial records over time as well. That they are making hundreds of millions of dollars. The last 2 years haven't been as successful for them, but all this information's out there for you to look at. And so people look at their profits, what's going on with the company. And sometimes you look at companies like Tesla, okay? If you don't know, Tesla makes electric cars, $594 a share, and this one has gone up dramatically in the last year. Last year, you could get Tesla for just $67 a share, and it's gone up almost 10 times in value. If you look at the percentage wise, it's gone up almost 800% in value. That's a huge increase, right? And if you look at, there's other charting that you can look at over time as well, where they're getting various things, and you can check this out on your own. But if we look at the last 10 years, you can start to figure out where they are and where they've been. Let me go back to the simpler because I don't have time to explain a lot of that, and there are a few figures that I don't know on that, right? All time, I mean, they were relatively low, like Tesla, ever since they've been the start, they've been relatively low, and then they take off. If you would have bought Tesla 10 years ago, you could have gotten it for like $3 or $4 a share, and now it's trading at $600 a share, right? When you buy stock, you have to think about the long term, okay? Because it may have days where the stock price dips, but you can't panic and just say, I'm gonna sell my stock now. All right. So we'll talk more about these details later on.